Welcome everyone. Just giving us a couple minutes here to get everyone in, and then we will get started. Feel free, if you have any initial questions, just type them into the chat box there
Welcome everyone.
the right of the video.
Hold on. Here.
Sorry about that. Had to mute the audio. Okay, cool. Thanks, Dylan. And that's my email. Okay, cool. So this is going to be recorded anyway, so we got a bunch of people probably that are still going to show up throughout the webinar. But let's get started. So once again, welcome to I guess now the second weekly webinar. I'm going to try to do this every week. For those who don't know me, my name's Chris. I run greenbartrading.com. All the info for my company, my Twitter, my Ticker TV channel, if I stream trades, Reddit, whatever you want, is all right here on your screen. So feel free to dig into that stuff. And what I wanted to do was just kind of, I wanted to do a quick presentation on just what I look for on every single trade that I take. So there's like certain things that I'll look for on every single trade. And so I want to just kind of go over what those are and, how to, and answer some questions about them, and then, how I use them and those types of things. So this will probably be a relatively quick webinar, but I'm going to leave a little bit more time for questions since there's more people in here this time. And there's also, it's more of a specific subject. So I figure people are probably going to have specific questions on this stuff. So let's just dive right in. So with any trade that I pay attention to, any trade that I'm looking at, there are 5 things, what I call the big 5, which are, in my opinion, the most important things, that will influence how a trade moves, how strong the trade is going to be in terms of how high it goes if you're long, or how low it goes if you're short. Just the quality of the trade overall. So I have a system of these 5 things that I pay attention to on every single trade. And these are the things that I will look at before I ever make, any decisions about, how much size I'm going to take, or specifically how I'm going to trade the stock, where I'm looking for my entry, where I'm looking for my exits, where I think the targets are going to be, all that kind of stuff. This happens before all of that. And they're relatively simple things to pay attention to. So the first one is the pattern. We all know that, as technical traders, we trade patterns, we trade chart patterns. So it's important to know your niche. It's important to know the patterns that you're good at, the patterns that you're comfortable with, whether it's bull flags, whether it's parabolic shorts, whether it's buying dips in trending stocks, whether it's timing the bottom on stocks that have gone parabolic to the downside. Just know what you're good at. Everyone should have a niche setup, or a niche pattern at the very least. And that's going to be the start of what you pay attention to. So the first thing that I look at is always the pattern. For me, my niche is parabolics. So I have a couple of niches, but one of the ones that I've found to be really successful lately are parabolics, things like ECR. We traded this on Friday in our chat room. These types of trades are what I look for, where the stock just gets so extended that it's almost a guarantee that it's going to retrace at least a little bit. And so I have this, vision in my head of what I want to see on this particular pattern. This type of extension is completely different from the type of extension that we're seeing on the S&P 500 right now, where the ETF has just gone up a small amount at a time. It's just sort of grinding upwards, and yeah, it's extended, right? It's gone from a 182 to 204. It's getting a little extended, but it's been a smoother trend. It's been more of a grind than if you look over here, where we just went from 212 to 182, which is essentially the same size move, actually a little bit bigger size move in 4 days. Whereas over here, it's taken us, a month and a half, several weeks at least. So know your pattern, know what you're good at. This is what I'm good at. So that's the first thing that I always pay attention to is what is the pattern? And if it's another pattern that I'm also good at, then, I might treat it a little bit differently. Maybe I'm better at, trading parabolics than I am trading some other types of setups, than trading bull flags, for example, or bear flags, for example, or buying dips. Maybe I'm better at doing this. So I always want to know before anything, what's the pattern? What am I good at? And that's the first of the big five. The second of the big five is float. And the reason that I pay attention to float is because the lower the float is, for those of you who don't know what float is essentially the supply of the stock that's available in the public market. So it's shares that are not locked up by insiders. They're not preferred shares. They're not in a lockup period due to the IPO. They're available to be traded by the public market, right? So just any Joe Schmo trader can go and trade some of the float. And the lower that number is, the more volatile the stock's going to be. So the second big thing that I pay attention to is what is the float? What is the supply on the stock? Because the lower the supply, obviously, given the same amount of demand, the lower the supply, the higher the price should be. And that manifests itself in the market in terms of the way these stocks move. Basically, the lower float stocks are the ones that will go parabolic, that will pull a move like ECR did, right? Where it goes from $1.20 to $2.20 in half an hour. AQXP, super low float stock. Back in August of 2015, went from $1.97 to $56 in 2 days. KBIO, if you've been around trading for a little while, you've definitely heard this name. Stock went from 40 cents to 250, and then Martin Shkreli announces that he's acquired 75% of the outstanding shares. The stock gaps up to $11 and goes on a run to 45. From 40 cents to 45 bucks in 1, 2, 3, 4, 5, 6 days. This is because the stock is low float. So the lower the float, the more volatile the stock is going to be, the more explosive it's going to be, the wilder the stock is going to be. So what I do is I have a general rule where I pay attention to anything that's under 100 million shares float. And it's really easy to check this. Just go to finviz.com and whatever ticker you're looking at. So let's look at KBIO, for example. Oh, we can't because they are bankrupt now. Let's look at AQXB. 15 million shares in the float, right? So 15.6 million shares float. This is going to be a very volatile stock, right? Because there's only 15 million shares available to be traded in the public market. So when news comes out and all of a sudden the stock in 1 day, is trading 62.5 million shares, that's why you see a stock that goes from $2 to $11 in 1 day. It's because of the float. So second biggest thing that I pay attention to is the float. My rule, like I said, is under 100 million shares, I would consider to be low float. And anything lower than that is going to become more and more volatile. So when you get down into the stocks that are only 20 million shares float or 5 million shares float, that's where you're going to see moves multiple hundreds of percent, in 1 or 2 days, sometimes in a matter of hours. So you have to be really careful with the float, and what the stocks that you're trading, because obviously, for example, if you're shorting something, right? If I'm shorting a stock like ECR, like we did on Friday, and this one is about 225 million shares float, I think, something along those lines. So this one is low, but it's not super low. So this type of stock, $1.20 to $2.20, making a 40 or 50% move is pretty extended. Whereas the stock only has 15 or 20 million shares in the float or 5 million shares in the float, you're going to get a move more like ORPN back here, where the thing went from $3 to to $8, right? ORPN is only, I think like 12 million shares float, 7.6 million. So, you know, even though the news wasn't even really that exciting, just because there's such a small amount of supply, it goes crazy. So second biggest thing is the float. If you don't know what the float is, easiest way to find it is on FinViz. Second easiest way to find it is probably Yahoo Finance. You go to finance.yahoo.com. Just put in whatever ticker you're looking for. Oh, I'm on finance.google.com. I think it's on here also, but yahoo.com, AQXP, and it's going to be on the key statistics page. So key statistics over here on the left-hand side, and then here's your float. So this is showing only 5.08 million. So this is the problem that I have with float, is that there's no real way to get an exact number. You can look at Yahoo Finance, you can look at FinViz. There's a couple other websites that have it out there, like shortsqueeze.com, I think, has the float. Well, it's got the short percentage of float, which we're going to talk about in just a second. But, you know, so there's a bunch of different websites that have it out there, but there's not like really a definitive source. What you can do is estimate a sort of worst case scenario by looking at the SEC filings, because the most recent 10Q or 10K will tell you the number of shares outstanding as of the date of the 10Q or as of the date of the reporting period. So you can extrapolate that out to determine, you know, if you don't know what the float is, you know that it can't possibly be higher than the shares outstanding. And so as long as you know that, you know, there's your worst case scenario. So I'll usually look on FinViz. FinViz seems to be pretty accurate from what I've found. Yahoo Finance is also pretty good. If anyone has any other suggestions that have, you know, a more official number, feel free to type them into the chat room. I would love to know, you know, if there's a more efficient way or a more official place to find this information. But this is what I've found so far. So the pattern, the float, those are the two of the big five. The third one is the short interest, also known as the days to cover. And what this tells you is out of the float, right? So you have a stock like AQXP, 15.6 million shares in the float according to FinViz. Out of that float, how much of it is held short? In other words, how many people, what percentage of people that are trading the stock are anticipating that the stock is going to go down? And the reason that I pay attention to this is because when you get a lot of people, 10%, 20%, 30 or 40%, that are all anticipating that the stock's going to go down, and then it gets good news or it just doesn't go down, it starts breaking out for whatever reason, those stocks have a much higher potential to squeeze all those people out because they're going to be panicking, right? If you have a stock like AQXP that's only got 15 or 20 million shares in the float, or possibly even less, right? And 30% of those shares are currently held short, and then the stock gaps up on news by 40 or 50%, right? Like over here, the stock closed at $1.79 and it opened the next morning at $2.45, right? So that is 245 divided by 179 is a 36.8% gap. So every single person who's short this stock wakes up to being down 40% on their trade, and then it takes off and runs 400 or 500% that day. Those people are losing money. And when you're short, the stock can go up forever. So you can keep losing money. You can lose more than you have when you're short. So it's really important to understand how many people are short, because the more people are short, the more the stock can go up. The more those people have the potential to panic out of the trade, to squeeze the stock higher and higher and higher. That's why you see these ridiculous, just epic moves like $2 to $56 in, just a few days. So that's the the third one. So where do you find that? Same place. You can look on FinViz. It'll show you the short float right underneath the short, the float. And on Yahoo Finance, it's going to be short percentage of float, and they have an as of date. The other place to get it, which would be probably the most official, actually this is another place also, shortsqueeze.com will have the shares short. Let's see what they say about AQXP actually. So they're saying 23%. Yahoo Finance is saying 14%, and FinViz is saying 7%. So we have a large range there. The most official place that you can get this is going to be Nasdaq.com, because the brokers have to actually report, the brokers and the clearing firms have to report the number of shares that are held short to the exchanges. So for Nasdaq stocks, at the very least, just go to Nasdaq.com, type in the symbol, click on short interest. And this is going to show you a couple different pieces of information. The first one is the short interest in terms of shares, as well as the date. And so what you can do is take that short interest, in this case 1.206 million shares, and divide it by the float or the shares outstanding. So I guess it depends on, whether they're using the shares outstanding or they're using the float to do their calculation for short interest. I would personally use float because, the shares outstanding could be much higher than the float. Some of these shares might not be able to be traded. So you want to only pay attention to the stuff that can be traded by the average Joe. So in this case, we've got 1.2 million shares outstanding. 1.2 million shares held short. And according to Yahoo Finance, about 5 million shares in the float, which is going to give you about a 20% short interest. The other thing that you can do, and which Nasdaq does for you by themselves, is to calculate what's called the days to cover. And the days to cover is based on the average daily volume of the stock. So in this case, it's got 1.2 million shares held short. On average, it trades 262,968 shares per day. So that would mean that if all of these shares were to be covered, it would take 4.58 days to do that. And so when the short interest gets super high, when the days to cover gets up into, the upper ranges, 20 days, 30 days, look at some of these stocks like, WTW has had their volume has increased significantly recently. So that will skew it. But, look down here, right? 15.8 million shares held short. And up to that point, only 766,000 shares were changing hands on an average day. And then look at this, within the next reporting period, right? From 10:15 to 10:30, average daily volume increases to 17.5 million shares from 766,000. If you look back on the chart at 10:15, you're going to see most likely that the stock had a large short squeeze between the 15th and the 30th of October. And there we go. October 16th, right? There's, 15 million shares held short. Yeah, 15.8 million shares held short. Then Oprah Winfrey comes in, says she's endorsing Weight Watchers. She bought a large stake. Stock gaps up from a close of $6.79 to an open of $12. So almost a 100% increase overnight. Every single one of those people holding some of that 15.8 million shares short is now down nearly 100% on their investment. And they're panicking because they want to get out. And look at what happens. We go from $12 to $20, and then a long consolidation, then another big gap. And then we go, to 28, 29, who knows, right? These things can go on forever. You see some stocks, BLTC, they go on these epic runs from $1 to $25. USU back in 2013. This is now LEU. Reverse split from 30 cents up to $3 or so. It drops back down and runs from $3. Sorry, reverse split to $7, drops down to 3, and then runs from 3 to 30 in like 2 weeks. That's because of super high short interest and very low float. So that said, those are the big things that I pay attention to. The pattern, the number of shares in the float, and the short interest. So anything over 10%, in my opinion, has squeeze potential, meaning it has the potential to start a large upward move as those shorts get squeezed out. The higher it gets, the more, the more the stock can squeeze. So when you see some of these things like SCTY, FinViz reporting 44.38% short interest. Almost half the people holding this stock are holding it short. So some people might think, well, that means that, the stock is probably screwed, right? The company, there's a reason that 50% of the people that are in it think it's going to go down, right? And that might be true. But when the company gets good news and now suddenly 50% of the people that are in it are stuck and they're down, that's when you get panicky upward moves. So those are the first three. If you have questions on these things, feel free, just type them in the chat and we will get to them at the end. Number 4, relative volume. So we have volume, right? Everybody knows what volume is. If you trade stocks, volume is the number of shares that change hands that day, right? So, daily volume is the number of shares that changed hands that day. So you look at any stock, you see ORPN, for example, on March 16th, traded 9,386,866 shares, right? So 9.3 million shares volume. ECR traded 8.1 million on Friday, so on and so forth. So that volume, what's important is not necessarily, the average volume. The average volume is important, right? But what's more important is the relative volume, meaning how much it's trading today versus what its normal average is. If you look at a stock like ECR, looks like, in this area, at least, it's traded, 500,000 to 1 million shares per day on average, for the last few months. You can look at this on FinViz also, or any other, financial website. You can just look up the average volume over the last 30 days or the last 90 days or whatever you want. But it's also relatively easy just to eyeball it. Just scroll across the chart and you can see when it heats up, it trades, looks like 1 to 3 million shares. Normally trades between, looks like about 100,000 and 500,000. So it's relatively, it's not super low volume, but it's also not super liquid. However, on Friday, it traded 8.1 million shares. So that's super high relative volume. And so the higher, the better, for me. The higher the relative volume is, the more crazy the stock can get. Something like ORPN back on the 16th, the stock normally trades 15, 20, 30,000 shares a day. So hardly anything. It's a very thin, very lightly traded stock. And then out of nowhere, because of this news on their phase 2 clinical trials, this day it trades 9.3 million shares. If you just do the math on that, right? 9,386,000 divided by, say, an average of, we'll be conservative and say an average of 100,000, which is actually way higher than what it actually is. But it's trading nearly 100 times its average on this day. So when you see a stock that's trading 100 times its average volume, the potential for that thing to go up is so much higher, or it just continue going down, right? If it's a negative piece, the stock is dropping for whatever reason. If the volume is 100 times its average, even 10 times its average, 20 times its average. The moves are going to become a lot more emotional. They're going to become a lot stronger. They're going to become a lot more volatile. So for me, volume is everything. Relative volume is super, super important, because the higher the relative volume, the more people are trading it and the more potential it has to make bigger moves. So for me, relative volume is definitely one of the biggest things that I look at. I don't trade stuff that doesn't have high relative volume, because if it doesn't have high relative volume, there's nobody paying attention to it. You're going to get an average sized move because the stock has average volume. If you want outsized moves that beat the market, if you want to make 50% or 100% on swing trades and day trades, you've got to have high relative volume. You've got to have people watching the stock. You got to have people trading the stock. Everyone has to be in that stock, because if they're not, then it's just not going to move. It's just going to sit there, or it's just going to do what it normally does. So high relative volume, super important. Easy way to judge it, is just look at the chart, look and see, how big this stick is, basically. In this case, you can see, the volume is very light, first of all. So you have, aside from this like gigantic stick over here, so the volume is really light. You can see it on the chart here. You got this big stick in the middle, was 220,000 shares or so. But as soon as the 16th came around, this volume is literally invisible. You can't see it anymore because this stick is so big. That's high relative volume, and that's what you want to see if you're going to trade a stock and expect it to make, a 100% move or a 200% move or 1,000% move, like some of these stocks have done. LEI was a good example. Look at the relative volume on this thing. Leading up to this, 15,000 shares, 10,250 shares, 5,200 shares. On this day, 14 million. This thing's trading like 500 times its average volume. So there are 500 times as many people, in this stock, trading this stock, than normal. And that's going to make crazy things happen. So that's relative volume. So those are the first four. We have now the pattern, the float, the short interest or days to cover, and the relative volume. The fifth one is the news. Know what is moving the stock. Know the fundamentals of the company. Understand, what the company does. Understand why the stock is up 100% or down 50% or down 70%. You should know why the stock that you're trading is moving before you trade it. If you don't understand what the news is, then you're basically gambling. You don't really know what to expect, because you don't know what people are feeling. You don't know what people who are buying it are thinking. You don't know what people who are selling it are thinking. You just can't trade without understanding what the news is. So if you don't know, how to interpret the news, we did another webinar last week on analyzing a company's 10K, their annual report. So if you want to go back and check that video out, it might actually be useful, because I find that reading the 10K and understanding what the company does and how they make their money and who their customers are and those types of things will help you to better understand how news affects it and to better understand what news is significant. So for me, these are the big five. I have to be playing a pattern that I know, playing something I know I'm good at. I have to be playing a stock that's low float, playing a stock that has, ideally, if I'm going long, high short interest. However, if it's something like ECR and I'm going short, then I might actually want to find something with lower short interest, because that way it doesn't have as much potential to squeeze and screw me. So stocks that I'm going short, prefer, unless I'm shorting them very, very high, I prefer to have a little bit lower short interest. I prefer to have all of those shorts already squeezed out, basically. And I'll adjust that. I kind of skipped over this point, but I'll adjust, what float I trade and what short interest I trade to account for changing market conditions. I tend to go for higher float stuff when the market is very volatile. So when we have situations like when the SPY is, after this big drop back here in August of 2015, when the SPY is just gapping a lot, there's a lot of panic in the market. There's people unsure of what's going to happen. During these times, I tend to trade stuff with higher float just because you don't necessarily need low float stocks in order to have a lot of volatility if the entire market is volatile. So as the market becomes more volatile, I'll start to trade stuff with higher float. As the market gets more into a tight range like this, now you need those stocks that are low float in order to make sure that you have the volatility you need to make a lot of money. So these are the big five: pattern, float, short interest, relative volume, the higher the better, and news. Understand what's moving the stock, right? Make sure you're trading something that's got a lot of relative volume, low float, high short interest, and a good pattern. So that's it. Very simple presentation tonight. Feel free to ask questions and let's talk. So got a couple of questions here. Edward would like to know, am I subscribed to a live news service? No, actually I'm not. I've thought about getting one in the past, but I don't necessarily trade on news. In other words, if I see a press release come out midday, I'm not the type of person that's just going to jump on it just because of the press release. So I don't necessarily need to know the news instantaneously. I read it in the morning, obviously, and make decisions as to what I'm going to trade that day based on what's moving. But I don't necessarily need to know instantaneously during the day what happens in terms of news. It's nice, but you're fighting with algos. You're fighting with traders who are much more experienced than you. You're fighting with mutual funds and hedge funds who probably have the information before you. So, it's a questionable whether or not it's worth it to me. But I do know people that are subscribed to live news feeds. They are very fast. I've seen people, make some big gains on stuff as soon as it pops up. Before I even know what the news is, they're already in and out of the trade. So yeah, there are some advantages, but I'm not personally subscribed to anything. Paul, can short interest be used as a means to generate trade ideas? Absolutely. If you go into FinViz and go into the screener, and keep in mind that this is going to be inaccurate to some extent because FinViz doesn't update as often as Nasdaq does, but literally just go here, float short, show me anything over 30%. Show me all the stuff that a ton of people are holding short. And then if you go to custom, you can actually organize them by the highest short interest. In this case, we have, so these numbers I think are probably inaccurate, like 80%, 78%. INSY, actually, INSY, I did look into this one, and I believe this 78% short interest is fairly accurate, but their shares outstanding has increased quite a lot. From the it hasn't increased, but it's significantly higher than what's reported on Yahoo Finance and FinViz. So I think, I'm not totally sure that it's accurate, but I think this one's more accurate than some of the other ones. But anyway, yeah, you can just go here and look at all these high short interest stocks. Once you arrange them, it maintains their order. So then you can just go to charts, scroll through them, and look for ideas. MNKD, even though it's up from $1 to $2 in just 4 days, roughly, it had 40% short interest leading into this, so can it go higher? Absolutely. Would I buy it? Probably not, but it can definitely go higher. This thing is the type of stock that can squeeze because it's got such high short interest. Edward, what's your take on SPY? Think more upside or pullback? Let's take a look. Damn it, I always rearrange these things. Now I gotta delete them and put them in order again. Hold on a second. SPY, IWM, QQQ, EIA. There we go. I mean, we are kind of like right into this brick wall that we could not get over for, or could not get under for half of 2015. So, you know, this 205 spot, I think, is a turning point. We either need to consolidate sideways here between the 200-day moving average and 205, 206 area, and then break out, or, you know, we need at least a rest, you know, so some kind of pullback or something. I think could just blast through this thing and go to 210. I mean, who knows? The market's wild right now, so who knows? But I think just based on the fact that we've come all the way from 180 up to 204, we're right at the 200-day moving average. We're right at this huge resistance level. I think we go back down a little bit and then probably continue upwards, but who knows? Time will tell. That's my take. We might go up, we might go down, we might go sideways. How's that for a professional opinion? Okay. Juristary saying there is the UWAX in Europe indicator. It's very similar to short sentiment. Does it make sense to look at this? This indicates puts and calls. If the puts are too much, then the index will go up. Yeah, actually. So I think there's something similar in the United States called the put call ratio, which I actually don't know how to check. I don't really use it personally, but I have heard that people will use the put call ratio in a similar manner to using short interest. You know, where they look at it and basically say more puts equals bad, you know, and if they're wrong, then, you know, all those people are losing money on their puts basically. So yeah, similar type of thing. All right. Any other questions? Going once. And going twice. All right. Okay. So cool, guys. Short webinar tonight. Oh, there's another question. Hold on. Next question. Which books do you recommend, or do I recommend only my webinar and only my mentoring? No, of course not. I mean, I haven't personally found like a ton of good trading books, but it depends on what you're looking for, I guess. For me, there's a book which I've just finished reading recently called Financial Shenanigans. This one's kind of interesting, how to detect accounting gimmicks and fraud in financial reports. This one really helped me with understanding financial reports. This would be, I guess, for more of a long-term investor. However, it can also help you to understand earnings reports a little bit better, and earnings reports are a big mover for day trades as well. So, you know, it might actually help you to pick out, you know, companies that are just fluffing up the press release in order to pump the stock. So I found this one, which I think is pretty good. It's just a really interesting book to read. But as far as like day trading and swing trading in modern markets, like there's just not, in my opinion, that many good books on it that teach you practical stuff. So unfortunately, I don't really have a good recommendation because there just are not that many of them, if any. For day trading, would it be more of technical and psychological books? Yeah, I think that's actually probably the best way to handle it. But the problem is that, like, with day trading and with like the technical books that are out there, they're not going to teach you about like a parabolic move. You know, like this is something that modern traders, in my opinion, have kind of come up with. or at least the terminology for it. All the technical books that I've ever found that are like about identifying chart patterns and things like that, they're all about the traditional chart patterns, like head and shoulders, double bottom, double top. You know, some of them talk about flags and bull flags and bear flags. But in terms of the concepts that I use every day, they're not very helpful. Yeah, Edward, Daily Trading Coach, in my opinion, is actually a really good book. From a psychological perspective, I actually really like that book. The one he's talking about, for anyone who doesn't know, is Daily Trading Coach. I believe it's by Brett Steenberger. 101 Lessons on Becoming Your Own Trading Psychologist. Yeah, Steenberger. That's who it's by. So yeah, this one, I've read it. Great book. The lessons you can, just write on Post-it notes and stick them all over your wall if you want to. So, it's pretty cool to read. Juristeri would like to know how to enter the position. How to enter which position? How I enter is very dependent on what the pattern is, what setup I'm trading. So it really depends on the position. It really depends on the trade. But if you have a specific question, I can answer it. Edward, for parabolic setups, how important is level 2 for me? Level 2 is very important for me on all setups, actually. Parabolics, yeah, definitely on parabolics, because when a stock gets up this high and becomes this emotional, the spread is going to get really big. So you have to know where you're going to be filled. You have to know where you have a chance of getting filled. And also you have to know, what the offers are like, how big they are. Are there big players in the stock trying to manipulate it? Those types of things. And you're not going to be able to see that by just looking at the chart. You've got to look at level 2. So it's very, very important. I use level 2 all day, every single day on every single trade. So Juristeri, it totally depends on the position. You're asking how big the position is going to be in terms of percentage of my account. It totally depends on the trade. Some trades I'll only take a very small percentage of my account, and other trades I would leverage, 4 times my account value if I like the trade enough. So, it just depends on the trade. Most of my positions are, I don't know, maybe 30% of my account, the position itself, right? And then I risk 0.75% to 2% max of my account on any individual trade. Edward, do I scale? Yes, I do scale, especially on parabolics, because you never know. If you guys follow me on Twitter, you saw me post the other day on ORPN. This was my first entry. So I was off by $2 a share on my first entry. This was my second entry. Luckily, I was able to hold it because I've done this enough times that I knew this stock was going to be psychotic. I knew, based on the float, based on the short interest, based on the volume, based on these big 5, I knew it was going to be a crazy stock. And so I started in very, very small and was able to add into it in order to miraculously turn it around into a profit, even though visually it looks like it took a loss. I did actually end up taking a small profit on this. It was $50, but I was down, $800 at the top. And so, this was very close to being at a point where I just said, I need to get out of it, regardless of the fact that I know I'm right. I knew I was right on it, but I was just way off on the entry. The only reason that I was able to stay in the trade and manage to turn it around to basically a break-even trade and eliminate that huge loss was because I scaled. So yeah, you need to do this on parabolics. It's very difficult to do, though. I don't personally recommend it for newer traders. Even as someone who has been trading now for 13 years and been day trading for 5 or 6 and day trading full time for the last 2.5 or 3 years, I still screw up. There are still stocks where I'm $2 away from the top, and I'm down 500 or 600 bucks because I was too early. So I don't recommend doing this for new traders because you just really have to know what you're doing and how to fix it if you're wrong. On the other hand, ECR, I was very close to the top. This one turned into a really nice trade. So, there's good and bad, I guess. Edward, so do you recommend margin? Yeah, I recommend using margin intelligently. I don't recommend, just margining just because you can margin, right? I recommend using it smart, right? Even if if I trade a $30,000 account, right? So even if I've got 4-to-1 leverage, so I can trade 120K during the day if the account is 30,000 bucks. But that doesn't necessarily mean that I'm going to trade 120K on a single position. And it also doesn't mean that if I am trading 120K, it doesn't necessarily mean I'm risking all that much. I've traded a $100,000 position before where I'm only risking $100 because it's just a really, really tight stock. It's a really, really tight pattern. It's in a very tight range. And, the reward to risk just makes sense. So position size, is not really a huge concern in terms of margin, I guess. Just use it intelligently. You know what I mean? Don't go, you got a $5,000 account and you're trading with some overseas prop firm who gives you 50-to-1 leverage. You shouldn't be trading a $250,000 position on a $5,000 account, obviously. What else? Oh, Juristari wanted me to understand or wanted me to re-explain what are parabolics. Parabolics are basically just stocks that have gone up way too far, way too quickly. So a stock like this ECR, see how it was just kind of trending along and it was going up, relatively slowly. And then all of a sudden it just took off like a rocket and went straight up. What I'm essentially banking on is the idea that what goes up must come down. When a stock gets very, very extended like this, it's very likely that it's going to retrace at least a part of that move. In this case, it retraced almost the entire thing. So this was a really, really nice parabolic because it went up. If you were lucky enough to catch this at $1.20 or so, you made $1 on the trade. And then if you're lucky enough to short it up here near the top, then you made $1 on the way back down too. So, you could just flip it at the top if you were good enough. But, I personally just pay attention to the downside on these because I find that I'm too late on the upside. So instead of, chasing it to the upside, buying it at $1.50, $1.75, I'll just wait until it peaks out and then make the money on the way back down. So. Where did you learn trading? Lots of experience, lots of lost money. And I've taken a number of courses, online stuff. I had a mentor that I hired. So, similar to what I do now with my mentorship program, people can come and basically pay me to teach them everything that I know. I did exactly that a number of years ago. I paid somebody to teach me what he knew, and it worked out great. But, a lot of what I know is just from experience. It's just from, making a trade and going, well, shit, that didn't work, and losing money, and then making another trade and finding out what works through experience. Okay. Juristar wants to know, I missed this one, sorry. How to look at sentiment, which you talk about on Nasdaq. Could I explain once again? Are you talking about the short interest, Juristai? Okay. Not sure what you mean. I'm not sure what you mean by that. Cliff wants to know, how do you find your parabolic trades? It's actually stupidly simple. I have a scanner that runs in Thinkorswim that looks for anything that has 5 candles in a row that are the same color. So yeah, by the way, guys, if I skip over your question, it's just like I can still see it. I have the chat on the other screen. I just, misread it or skipped over it for whatever reason, but I can still see it. So I'll get to them. Yeah, so I have just a very simple scanner. All it looks for is any stocks that are basically the last 5 candles are green, for stocks that are moving up. And then I have another one that looks for the last 5 candles are red. And it updates every 5 minutes all day long. And so I just kind of flip through those stocks and eliminate, probably 90% of them, because most of them, it just picks out the little ones that are like, oh, it's gone up, 4 cents every candle for the last 5 minutes. Or for the last 5 candles. Like, that's not what I'm looking for. What I'm looking for is a stock that goes, haywire, running from $1 to $2 in an hour or a half an hour. In this case, we went from $1.20 to $1.35, which is a fairly large percentage move in itself. And then it consolidated for 5 minutes. And then it went from $1.35 to $1.50, and then $1.74, and then $1.98, and then $2.09, all within 20 minutes. This is a parabolic move. What's not a parabolic move is this over here. Green, 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 green. Yeah, it's 5 green candles in a row, but it's not parabolic. So my scanner looks for anything that shows me 5 green candles in a row. And then I filter through them manually to find the ones that I like. Yeah, sure. This gentleman would like to know one more time how to find short interest on Nasdaq.com. All you do is go to Nasdaq, and you'll have this ticker box at the top, and just type in the symbol right there. And then over here on the left-hand side, click on short interest. And there you go. And what you're looking at is, this is the number of shares, and this is the date. So as of the 29th of February, there were 27.4 million shares short on Solar City. So that's how you do it. By the way, this webinar is recorded. So if you need to go back and review it, feel free. Just go back onto YouTube. It'll be saved on the website. Edward Hernandez is saying Thinkorswim is free as long as you create an account. You don't need to fund. That is true. However, level 2, Edward, level 2 and your bids and asks in the watch list will be delayed by 15 minutes. So you don't have true real-time data unless you actually fund the account. Just a heads up. I mean, I just keep like a very small amount of money in mine just so I can have it for backup charts and for scanning. The broker that I use is Speed Trader, so this is DAS Trader is the Speed Trader Pro, broker software. So I don't actually use Thinkorswim for trading, but I do use it for scanning, and I keep it in case DAS goes down and I don't have charts. Okay, so I think that is it. I think that's it for all the questions. If anyone has any other questions, you can always email me. Of course, I don't have my email on here. Hold on a second. Let me add in my email. Email is info@greenbartrading.com. So all you got to do is just shoot me an email, ask me whatever questions you want. I do, like I said, have a mentorship program. So if you're interested in learning how to trade, feel free to just jump over to the website, check it out. There's a couple of different packages that you can use. ranging from $500 to $2,500. Everything is done one-on-one. So it's all webinars like this, except it's just one-on-one. It's not a class. We actually would be talking, via audio chat. We can do screen sharing just like I'm doing right now. So, there's all kinds of different options that we can talk about. Or, if you want, just at the bottom here, you can just hire me for an hour if you want, just talk about stuff. So feel free, check this stuff out. Follow me on Twitter. Email me your questions, like the website on Facebook, yada, 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 all that fun stuff. Also, I have all of my, not all of them, but a number of my trades shared on this website here, traderview.com. So if you go to this address, there's a bunch of trades shared. So you can actually look at my entries and exits. You can look at, where I bought and sold, and, feel free to check those out, study them, and hopefully learn from them. So these are the big five. Once again, just to summarize it, make sure you know what you're trading in terms of your pattern. Pay attention to float. You want something with low float, high short interest, high relative volume, and to understand what news is moving the stock. This is obviously for long trades, right? You want to have low float, high short interest, high relative volume, and positive news. If you're trading short, you probably want to have lower short interest. You might want to have a little bit higher float so that it's not so crazy. The relative volume, I still like high relative volume for shorts, but it depends. I'm just not as picky about it for short trades. And then understand the news. Jurist or I would like to know which city I'm in. I am in Charleston, South Carolina, in the United States. Edward, level 2, unless they have changed their policy, will not be real time. It will show you, it looks like it's real time, but it's actually delayed by 15 minutes. But I mean, maybe they changed their policy. I don't know. I can't see why they would give you, free level 2 information. That's a service that you have to pay for on every other broker that I know. So just be aware. I guess that's all I'm saying. Gotcha. Okay. Well, maybe they changed their policy then. But either way, I don't use Thinkorswim for level 2 anyway. So it doesn't affect me, but that's good to know actually. Because everybody that I have ever talked to, and before I had a funded account, level 2 was not real time with Thinkorswim till I funded the account, and then it was. All right, cool. So any other questions, just shoot me an email, or hit me up on Twitter. I will be happy to respond, happy to answer whatever you need. All right, guys. Thanks very much, and we'll see you next week for another webinar. Later.